Something interesting is happening in the Bitcoin market right now. Many traders are betting that the price of Bitcoin will go down. This is called shorting. When a lot of people are shorting, it can create a special situation. This situation is known as a potential short squeeze. It is important to watch for this because it can cause the price to move up very quickly and unexpectedly. We are seeing signs that this might be about to happen. This does not mean it is guaranteed, but the conditions are becoming favorable for a sudden price change. Everyone who follows crypto should be paying close attention to these signals. So, what is feeding this potential squeeze? One key indicator is something called negative funding rates. Imagine a marketplace where traders make bets on Bitcoin's future price. When most traders bet the price will fall, they have to pay a small fee to those who are betting it will rise. This is what we call a negative funding rate. It is a sign that the market sentiment is very pessimistic. Too many people are expecting the price to drop. This creates an imbalance. This pessimism can sometimes be a contrary signal, meaning the market might be ready to do the opposite of what everyone expects. When funding rates are negative for a while, it becomes expensive to keep betting against Bitcoin. The traders who are shorting must continuously pay these fees. If the price of Bitcoin does not fall as they expect, they start to lose money. If the price begins to rise even a little bit, these traders get nervous. They might be forced to close their positions to avoid bigger losses. To close a short position, they have to buy Bitcoin. This buying pressure is what can trigger a larger move to the upside. It is like a coiled spring waiting to be released. This chain reaction is what we call a short squeeze. A small increase in price forces some short sellers to buy back. This buying pushes the price up even more. This in turn forces more short sellers to buy back their positions. It creates a powerful upward spiral that can catch many people by surprise. The recent negative funding rates are a clear warning that the market is overloaded with bearish bets. This makes the environment ripe for a squeeze. While the market has been slow, this could be the catalyst that brings back volatility and excitement to Bitcoin's price action. If we zoom out and look at the larger trend, Bitcoin is still technically in a bull market. We are still well above the lows we saw in previous years. The long-term picture remains positive for many investors who have been holding on. However, it is also clear that the upward momentum has slowed down significantly in recent months. The explosive price gains we saw earlier in the year have paused. The market seems to be taking a long break, moving sideways for a prolonged period. This has made many people feel uncertain about what will happen next in the market. This slowdown can be seen as a healthy consolidation. After a big run-up, it is normal for a market to take time to build a new foundation. Think of it like a marathon runner taking a water break. The runner has not stopped the race, but they need to rest and refuel before continuing. Bitcoin is currently in this resting phase. The price is trading within a large range, without making significant new highs or lows. This period can be frustrating for traders looking for quick profits, but it is a natural part of any market cycle. It allows the market to digest the previous gains and prepare for the next leg. The key support level for this larger trend is around $56,500. This is a price area that has held strong during previous dips. As long as Bitcoin stays above this level, the long-term bullish structure remains intact. If the price were to break below this support, it would be a major warning sign. It could signal that a deeper correction is underway. On the other hand, the major resistance is the all-time high, which is around $73,800. Bitcoin needs to break through this ceiling with strong conviction to confirm that the bull market is ready to resume its upward climb. For now, the market is in a state of balance. The bulls and the bears are in a tug-of-war, and neither side has been able to gain control. This is why the price has been stuck in this range. The big question on everyone's mind is which way it will break. Will the support hold and lead to a new rally? Or will the resistance prove too strong and push the price lower? The longer the market stays in this range, the more powerful the eventual breakout is likely to be. Patience is crucial during these times of sideways movement. When we look at Bitcoin's shorter-term chart, we can see a couple of interesting patterns forming. One of the most talked about patterns is a falling wedge. Imagine two lines that are both pointing downwards, but the top line is steeper than the bottom one. The price is bouncing between these two lines, getting squeezed into a tighter and tighter space. A falling wedge is typically a bullish pattern. This means that when the price eventually breaks out of the top line of the wedge, it often leads to a strong upward move. We are currently watching to see if Bitcoin can make this breakout. Another potential pattern that some analysts are watching is an inverse head and shoulders. This pattern sounds complicated, but it is easier to visualize. It looks like a person's silhouette upside down. There is a low point, the left shoulder, followed by an even lower point, the head, and then another low point that is similar in height to the first one, the right shoulder. This pattern is also considered a bullish reversal signal. If the price can move above the neckline, which is the resistance level connecting the highs of the pattern, it often signals the start of a new uptrend. The most important price levels to watch right now are the support and resistance zones. The key support area is between $58,000 and $60,000. This is the price zone that Bitcoin needs to hold to prevent a further drop. A decisive break below this level would be a very bearish sign. On the upside, the main resistance is around $66,000 to $67,000. This is the area where sellers have repeatedly stepped in to push the price back down. For the bulls to regain control, they need to push the price firmly above this resistance zone. A breakout above $67,000 would be the first confirmation of a potential trend reversal. All these patterns and levels give us a map for what might happen next. The falling wedge and the inverse head and shoulders suggest that a move up is possible. However, patterns can fail. That is why it is so important to wait for confirmation. A confirmation would be a strong price move that breaks through a key resistance level with high trading volume. Without this confirmation, these patterns are just possibilities. Traders are waiting for a clear signal before they commit to a direction, which is why the market feels so quiet at the moment. Alright, let's take a quick tour of some of the major altcoins and see how they're holding up. Ethereum, or ETH, which is the second largest cryptocurrency, is honestly in a similar situation to Bitcoin. It's been facing some really strong resistance around the $3,600 level. Sellers have been super active there, just not letting the price move any higher. For Ethereum to really signal a trend reversal, it needs to break through this resistance and actually stay above it. On the downside, the key support to keep an eye on is near $3,300. If Ethereum can hold this level, it still has a decent chance to try for another break at that resistance. But if it drops below this support, that would likely lead to more weakness and, another retest of lower price points. Now, Solana, or SOL, has honestly been struggling a bit more than some of the other major altcoins. Right now, it's facing a pretty significant resistance wall around $140. This level used to be a support zone, but now it's acting like a ceiling. For Solana to show any real signs of life, it has to reclaim that $140 level and turn it back into support. The current support for Solana is near $125. If it breaks below this, it could open the door for a much deeper correction, maybe even towards the $100 mark. So Solana's recovery really depends on whether it can push past that tough $140 resistance. Moving on to XRP, it's been trading in a super tight range for quite a while, which I know is frustrating for a lot of holders. The key resistance for XRP is at about 50 cents. This price level has been a major hurdle for months now. If XRP can manage a strong and sustained break above 50 cents, that would be a really bullish signal, and could finally wake the coin up from its slumber. The critical support level is around 45 cents. As long as XRP stays above this, it's still in its consolidation phase. But if it drops below this support, we could see a significant price drop. So it's definitely a crucial line of defense for the bulls. And finally, let's talk about Chainlink, or Link. This is another coin that's just trying to find its footing. Right now, it's battling resistance near the $15 mark, which has been a tough spot for Chainlink to overcome. In order to reverse its recent downtrend, Link needs to decisively break above $15 and hold it as a new support floor. The major support for Link is currently around $12.50. This is a critical level that really needs to be defended to prevent a bigger slide downwards. So, just like the other altcoins, Chainlink is waiting for a clear signal. And honestly, its fate is still closely tied to whatever Bitcoin decides to do next. So, in a market that's just packed with uncertainty, the best strategy is honestly to be patient and prepared. I get it. It's super tempting to act on emotions, especially when you're hearing all this exciting news about a possible short squeeze. But making decisions based on fear or greed, well, that's usually a recipe for disaster. Instead, it's wise to wait for clear signals from the market. That means waiting for the price to actually confirm a breakout above a key resistance level or a breakdown below a crucial support level. Don't try to guess the direction. Let the market show you the way first. Protecting your capital should always be your number one priority. That means not risking more money than you're willing to lose. In times like these, it might be a good idea to reduce your position sizes, or even just stay on the sidelines until a clearer trend shows up. Setting stop losses is another essential tool in your kit. A stop loss is basically a preset order to sell your asset if it drops to a certain price. This helps protect you from big, unexpected losses if the market suddenly moves against you. Think of it as your safety net in a pretty volatile environment. It's also really helpful to have a plan for both scenarios. What will you do if Bitcoin breaks above its resistance at 67,000? Maybe you decide to enter a long position, but with a clear target and a stop loss in place. And what if Bitcoin breaks below its support at 60,000? You might decide to sell or even consider a short position, but again, with a clear plan. Having a strategy for both the upside and the downside takes the emotion out of your decisions and lets you act logically, no matter what happens. At the end of the day, the market's gonna do what it wants to do. We can't control it. All we can really control is our own actions and reactions. The current market conditions are definitely interesting, with the potential for a big move. The negative funding rates and those chart patterns are pointing towards a possible short squeeze, but, possibilities are not certainties. So, stay informed, stay cautious, and stay disciplined. By focusing on a solid strategy and protecting your capital, you can navigate these uncertain waters and be ready to grab opportunities when they clearly show up.